So if you've ever wondered what the difference is between an FHA loan and a conventional loan, you've landed on the right video. Many people get deterred from even thinking about buying a house for the first time because there's so many different loans, but today I'm going to dive into what the differences are between the most two popular loans, which is an FHA loan and a conventional loan. I'm gonna break it all down, so make sure you stay tuned. Hey everybody, my name is Lillian Chuckweezy. If you're new to my channel, welcome. Thank you for tuning in. Every week I hop on here to give you tips and advice about buying a home here in Philadelphia. And my job as your local Philadelphia real estate agent is to make your buying process as easy and smooth as possible. So if you haven't done so yet, go ahead and hit the like button and subscribe to the channel if you want to learn more about buying or investing here in Philadelphia. So the first thing to understand about an FHA and a conventional loan is that both can actually be used to purchase or refinance a house later down the line. So let's first dive into an FHA loan. Now people actually label it as a first-time home buyer's loan, but that's actually not the case. The reason why people confuse it with that is because it usually helps more first-time home buyers qualify for an FHA loan than any other loan. And the reason why is because FHA guidelines are very lenient with people who have lower credit scores. And the acronym FHA actually just stands for the Federal Housing Administration. They're actually pretty lenient in a sense that if you have a 500 credit score all the way up to 579 credit score, you'll actually be able to qualify for a loan, but you might have to put down 10% versus if you have a 580 credit score and above, you'll be able to put down about 3.5%. And when I say put down, I'm referring to your down payment of the house. Now the thing about an FHA loan is because they're very lenient in terms of helping people with a lower credit score, they also are taking on a little bit more risk. So in order to mitigate that risk on their end, they include what's called a mortgage insurance premium on your payment. And this is actually a part of the buyer's responsibility. And the reason they include that is because it'll actually protect the lender just in case the borrower defaults and they're not able to continue to make their mortgage payments. Now there are actually two types of mortgage insurance payments. The first is an upfront mortgage insurance premium payment of 1.5% of the loan. And you can pay that either at the time of close or it can actually be rolled into your total loan amount. Or you can pay the mortgage insurance premium monthly in addition to your monthly mortgage payments. Or you can actually add that mortgage insurance premium payment onto your monthly mortgage payments, and you could be paying all of it on a monthly basis. If you do put less than 10% down on your loan, you will continue to pay that monthly mortgage insurance payment over the life of the loan. But if you do put more than 10% down, then you'll only pay the mortgage insurance for the first 11 years before you can actually remove it. FHA loans also have more loan limits based on the area that you're in, but it's more important to consider the use of the house that you're actually going to purchase. Now the house that you purchase with an FHA loan has to be a primary residence. It can't be a second home, a vacation rental, or an investment property or anything like that. It has to be a house that you are physically going to be living in. But as I mentioned before, the great thing about FHA loans is that you typically have lower interest rates and you can get it with little to no money down with a low credit score. Now let's talk about conventional loans. These are typically the most popular loans that people take out when they are going to purchase a house. Now although conventional loans are more common, they are also more strict. Now conventional loans are usually funded by private lenders and then sold to government entities such as Freddie Mac and Fannie Mae. Now I'm sure you guys have heard of those companies. So typically with a conventional loan, you will need a higher credit score. This means at least 620 and above. So 620 is the minimum credit score that you can have to qualify for a conventional loan. And with the conventional loan, you will need a lower debt to income ratio than you would with an FHA loan, but that's something you're gonna have to discuss with the lender, or you can use one of these online debt to income ratio calculators. You can research that on your own, but my best advice would be to get in contact with the lender who I can actually connect you with and get pre-approved so you know exactly what you would be able to qualify for. But before you do all that, let's finish the video. So it is important to know, even with the conventional loan, there isn't a mortgage insurance premium, but they do still have mortgage insurance that you have to pay. And the reason for the mortgage insurance is to protect the lender from the borrower defaulting on the loan. So instead of it being referred to a mortgage insurance premium or MIP, that is usually with an FHA loan. But with a conventional loan, it's called private mortgage insurance because again, these are loans backed by private lenders. So essentially you'll have to pay private mortgage insurance if you put a down payment that is less than 20%. And you can actually request to remove that private mortgage insurance from your payment after your home has reached 20% in equity. But once you reach 22% in equity, the private mortgage insurance will automatically be removed from your monthly mortgage payment. But I do personally recommend once you reach that 20% equity, you request to get that PMI removed immediately because obviously the sooner the better. And just like FHA, conventional loans also have loan limits based on the area that you're living in, but again, consider the use of the property. And unlike FHA loans, you can actually use a conventional loan to purchase a second property or an investment property. And of course, you can use a conventional loan to purchase a primary residence. And the great thing about conventional loans is that they typically come with fixed interest rates and the opportunity to refinance later down the line. And as always, the higher your credit score is, the better interest rates that you will get, and that will equal out to a lower monthly mortgage payment. Quick pause, guys. If you are getting value from this video, go ahead and hit the like button and subscribe to the channel, and let me know whether you're considering an FHA loan or a conventional loan. And if you're considering neither, let me know which loan that you are considering, and maybe I'll make a video about that one. Now, just to give you a quick summary, both loans are great options to purchase your first or even second property. FHA loans are typically easier to qualify for because they have much lower credit requirements versus conventional loans. As I mentioned, the FHA loan, you can qualify for an FHA loan with a 500 credit score. Obviously, the higher the better, but with a conventional loan, you definitely need at least a 620 and above. And again, FHA loans are really great because you can also qualify for a low down payment. So this is really why people tend to call an FHA loan first-time home buyer's loan, because typically your first-time home buyer doesn't have that much money to put into it or the best credit score or anything like that. So the fact that an FHA loan has much more lenient requirements than a conventional loan, it's a great option for your first-time home buyer. And another option when it does come to the FHA loan is that even if you do want to use it to buy an investment property, you can simply buy it, move in it for the first 6 months to a year, refinance and get into another loan, and basically rent that property out. But that's a strategy for another video. Now, just to summarize, a conventional loan is also great for the people who have good credit and low debt. And with a conventional loan, you can avoid paying PMI by putting a down payment that's 20% or more, which will essentially lower your monthly mortgage payments. And also note that you can still qualify for a conventional loan with a down payment for as little as 3%. But in the long run, most borrowers actually save money with the conventional loan because there's no upfront mortgage insurance premium cost. And typically the monthly insurance payments are cheaper. Like I keep saying, guys, both loans are great options. It really depends on your personal situation, your financial situation, and what you actually want to do with the property in the short term and in the long term. So with that being said, if you guys are looking to buy or invest here in Philadelphia and you need help trying to figure out which loan is best, whether an FHA loan, a conventional loan, or another type of loan, please feel free to reach out to me. Myself and my team would love to help you along your home buying journey, whether it's a primary residence or a house that you're looking to use as an investment. We specialize in investment properties, so we would love to help you along that journey. If you are interested, go ahead and check down below. I'll leave my contact information. You can call me, email me, or even text me. Or even better, if you want to directly schedule a consultation call so you can talk with me about all the criteria that you're looking for in a house, then please go ahead and do that. I would love to help you get started on the right foot. And if you like this video, guys, go ahead and give it a like, subscribe to the channel if you're looking to learn more about buying and investing here in Philadelphia. Until the next time, guys, stay safe and stay blessed.